Dad's a what?
Worker.
I'm a worker? All right, I'll take that. Hey guys, Todd and what's your name? Eden Gordon. She just got home from school. She wanted to come down and talk to me. So she's going to help me with a free video. We're going to talk about consumer discretionary stocks, okay? Okay. So there is some interesting things happening at the large market cap stocks, specifically Amazon and Tesla, within consumer discretionary that's causing us some concern, but there's like mega market cap stocks, like less than a couple $100 billion, that are showing signs of strength. So consumer discretionary is it's a wide kind of reaching sector, and it'll probably help us, I think, answer the most important question of 2024 is, can the consumer hold up with higher levels of inflation and interest rates? So that's the question on the table. So to start, Eden, let's jump into relative rotation, and I want to show you what's going on with this. Okay, so what we're looking at here is we're looking at the monthly relative rotation graph, and what you can see is you push this through time. You can watch the date here, September of 2021, and then here we are into 22. And what we're doing is, as this graph is rotating on generally a clockwise fashion, the instrument that you're charting is picking up relative strength and momentum to some central benchmark, which most of the time we use is the S&P 500. So if it's rotating in a clockwise fashion, then you are seeing relative strength there in that particular market, okay? So let's go back and take a look at what is happening in these three key consumer discretionary sectors. So this is the XLY, which is your cap-weighted consumer discretionary. And pretty much since it just crossed into the blue quadrant here, that was like July of last year, and it tried to get up into the leading but was denied. Okay, and that is not a great look for consumer discretionary, because we really want to see it moving into the leading quadrant, joining the other growth sectors like technology and communications, okay? Now, a big part of that is going to be Tesla, is going to be Nike has been an underperformer, Lowe's has been an underperformer, Target, those are all big names in consumer discretionary. However, different story being told on these other consumer discretionary ETFs, the small cap and the equal weight consumer discretionary, they're making a hook up, right? Where XLY cap weight is making a hook down. This is the weekly. So each one of these dots represents 1 week, where on the monthly, 1 dot's 1 month. So from, let's see, this is going to be, you can see the date right here, November, December of 23. XLY was trying to rotate up, but watch what happened here in the last few weeks. Sharp hook back down, where look what guys kept going out to the right. Equal weight consumer discretionary and small cap consumer discretionary are rotating in, while the cap weight is being left behind, and that's only going to further continue this rotation up on the monthly small and equal weight. So pulling it all together, like, what does that mean? Well, there is trouble at the very large mega cap end of consumer discretionary, but some of the sub mega cap companies.
Could I go?
You can go. I love you. Thanks for the Nutella. Sorry, working at home. Some of the sub mega cap companies are rotating in, and there's some interesting setups here, as now we're really in the heart of earnings season. So I want to show you. Now, there's a few stocks that we are looking to trade that I'll be adding to our stock swing desk at TradingAnalysis. We maintain a very active stock trading portfolio, and this is just a small bit of the screening process we go through. So what we're looking at here is a few names that I want to take you through. Number one, let's take a look at Shake Shack. Okay, so this is daily. This is obviously a consumer discretionary restaurant, hotels, leisure stock. Big breakout potentially happening around the 80 and a half level. And if that's real, I mean, there's implications up into the 90s, 100. That's going to be the 786 retracement of the all-time high to where we are now. So, there's some upside room potentially in Shack. Another one, Lulu. You don't want to eat too much Shake Shack if you're going to try to fit into Lulu, right? There's some valuation questions on this. It's a really expensive premium brand, but I do like to pull back here into wave 4. We might have a little push up into the 520s, 540s. I think there's probably better setups. Airbnb's a really good one. Crazy inverse sort of continuation head and shoulders here, which could be a third wave objective. So the 100% projection of the first trend wave compared to this trend wave would get you 183. And then the distance of the head and shoulders, that whole thing is a 37% depth. Another 37% would put you off the screen up around the 210, 220. So upside to go there in Airbnb, another consumer discretionary. Shopify, another one. As soon as that screen pulls up, let's go. Come on, you can do it. And while that's pulling up, Marriott was also looking really good, sort of related to Airbnb. Shopify is looking good. It really has broken any bit of recent resistance, and we could be in a third wave position here, where there might be room to move into the 100s here easily in Shopify. DraftKings is another consumer discretionary stock that we traded. I've held in the wealth management portfolio, and this guy also looks like it wants to break through this 39 resistance and move on up potentially into the 50s. That's DKNG. Then another one is BKNG from DKNG. DKNG, DraftKings into BKNG, which is Bookings Holdings. This one potentially using a little corrective support here up into this zone of resistance around 4,000. And then the last one is Spotify, another consumer discretionary stock. Just got an upgrade from UBS, and this guy is starting to kind of ramp. I hold this in the wealth management portfolio. I'm looking to add him in our short-term stock swing desk for continuation wave 3 up into the 260s to 300. So really interesting stuff happening here. Again, below the largest market cap within consumer discretionary. I think on the surface, you might read that consumer discretionary is underperforming, but if you look at outside of the mega cap stocks, the smaller guys are doing extremely well, and maybe speaks to the health of the consumer and maybe one of the reasons and one of the supporting factors why I think we'll avoid recession and market may continue higher. So, all right, leave it there. We'll be putting these trades on. Check us out at tradinganalysis.com if you'd like more information. All right, see you guys. Take care.